Hi guys, welcome to TCM Education. This is our second video today on this super important topic for day traders, trading under constraint of a risk of 1%. So the risk tolerance, we decided, basically you can decide anything you want, but we want to show a strategy that can apply to all leading stocks in the US market, and you have a list here of at least 20 in front of you. Of course, not of them will fit the strategy, but some of them will. Those who will, and you can take a trade with a 1% risk on your position. Let's say you buy a $50,000 position. The risk is maximum $500, which is 1%, and you can get 3, 5, maybe a 10-to-1 intraday risk reward. That's the whole purpose of this exercise. Now we showed in the first video how OSCR reacted. We talked about the strategy. The link will be in the description. If anybody has questions, you can use our email, posted everywhere, comments in of the video. Basically, I prefer that you use our email because comments are likely to not to be responded. So again, we have so many stocks. Let's start with the one that fits the most important criteria, which is range percentage. And I want to repeat why range percentage is important, because this oh wow, this is ugly. This indicator tells us how big is the trading day, how wide is the range of trading between the highs and the lows relative to other stocks. So if the range percentage is 35% and the price of the stock is $100, it means that from the highs to the lows it traded $35, which is insane. Okay, so 35 is obviously not not something that we see very often, but 15%, great. Marvel yesterday only 5.6%. It was a great trade in the morning session. Reddit 8%. Let's go with something in the middle, like 11.4. Let's go with this stock, SRRK. This is the stock that I'm going to pick now. Let's see how it fits, when it fits. Obviously, not all of the stocks are going to fit. I hope you understand. And if they don't fit, how do we react if they don't fit? Keep in mind that the prerequisite of everything is a stock that's substantially stronger over the market, not a stock that's up 0.5% when the market is at zero. A stock that's up 5%, 10%, 20%. So those are the numbers that we want to see. We don't want to look even at stocks that are 0.5% above the market. And again, there are stocks, very few, that at one point are 0.5% and then turn up to be 20% at the close. But during the process, they will reach 5. Then we'll see them in the scanners. We can act. Okay, let's go with, like I said, SRRK. Hold on a second, guys. Timing is of essence. So let's start with the daily chart. So what do we see on the daily chart? First of all, we see a gap up. Now, more important than the gap up is this indicator, another indicator that we're looking at, and this is the combination of range and volume. Now, this is the biggest volume this year, because this is year-to-date chart. So what happened yesterday? That SRRK, I don't even know what this company is all about. Never, maybe I traded it. It doesn't really important. It's not really important. The symbol can be BETJ. Okay, so we don't care what the business of this company is, but we do care about the volume. We do care about the intraday price action. We care, if we trade it live, of course, about the spreads and how it trades versus other stock that we normally prefer to trade. So we don't want to trade a stock that's very spready and thin. So let's take a look at the volume yesterday. just to make a point. Okay, what is the volume yesterday? Volume yesterday, volume 5.3 million. That's great. Okay. Now let's look at the intraday chart. I have two options here: 1 minute, 3 minutes. Let's start with 3. So this is the intraday chart. Not very impressive, I might say, but let's see how we can deal with that. Okay? Let's see how we can deal with that. First of all, I'm ignoring this huge volume gap up and go in the morning. That's shameful because there are trades here, but it's highly unlikely that we will go and trade SRRK in this environment. I'm guessing, and again, just looking at the chart, that it is both spready, very volatile. Trading it under 1% risk is impossible, really impossible. Okay, then the stock tests 37, and now I'm ready to buy it basically over 37. Really, this is a perfect. Let me show you a breakout pattern, and you can see this triangle that's building here over 37. Guess what? It didn't reach 37. So it tests 37, drops almost $2 and moves sideways. Now, what can we do? Assuming that by now we are observing. So we have this resistance level, which is 36. Again, failure. And we have this support level, which is 35. In retrospect, I have to say that this is a bit disappointing, but the only place to go, and let's see if it fits the 1% strategy, is long 36 here. We'll see immediately if it fits the 35 cent risk reward, or, which is a way tougher trade and not a lot of people will be able to trade it, use this pullback to 35 and enter it on this drop with a limit order and use 35 as a stop loss. So again, this is a way tougher strategy to implement. Way tougher strategy because you have to enter with a limit order and you don't know exactly what is your entry. Is it 35.10, 35.15, 35.20? Of course, if you have a limit of 1%, then it's going to be 35.35. Okay, so you can enter as high as 35.35, place the stop loss under the round number, it works, and what do you gain here? $1, so that's barely 3 to 1. Again, I'm not trying to force trades, I'm just trying to elaborate on options that you have as a trader to trade. Again, there are many other opportunities, so it's not like this stock is the only one and we need to force a trade here. I agree that anyone that says I cannot trade these pullbacks because I don't have a clear stop loss and I don't know if what happens if it drops under 35, and the answer is yes, you lose money on the trade. But it didn't. Okay, now why it didn't, it doesn't matter. Now what is the smart thing to do here? Okay, and that takes a lot of experience, and some trades will work, others won't. But when a trade like this is going to work, and this stock is up 16% at the end, but this is a double-digit movers. Double-digit movers are best movers. Okay, let's ignore the triple-digit movers, which are highly crazy and volatile and can move also against you double digits. So this one is not going to move against you double digits, and if so, you have a stop loss. Take a look at the option here. So if you decided to use the round number, which is a super important strategy for day traders, use a round number, place a limit order to buy at 35.15 or 35.10. Now if you get picked and you enter the trade, your risk is only 15 cents, which is 0.5%. So I'm not talking now about the risk of 1%, I'm talking about half of that. Okay, and now if you risk 0.5% and you get $1, which is 3%, it means that's 6 times the risk. I hope it was clear. So again, you use the round number, enter on this pullback. Let's say you try to fish it at 35.20 or 35.15, and you're lucky with that. Let's say if you're not lucky, you're not lucky. It's running away. No harm done. Okay, so the worst case scenario is that it hits 35.15, you enter the trade, then drops under 35, you exit the trade with a 0.5% loss. That's a loss that's not going to affect anybody's P&L. 0.5% loss. Zero, it's nearly zero loss. Now when it works, you get $1 here almost at the close. So you get not only 1 to 6 risk reward, you get $1 on your position, and $1 trade is always a welcome trade for a day trader. Now percentage wise, it's 6% on your risk, which means if you're risking on 1%, in this case let's say $20,000, on 0.5% you can risk $40,000. Just making a point. Again, I'm not a financial advisor. I don't want to get involved with anybody's financials or money. Just making observations, and you can accept them or not. You can buy this position with $5,000. You can buy it with $50,000. You can buy it with $100,000. There's absolutely, I don't want to say you can buy it with $1 million. No. But you can buy it with $100,000. That's 3,000 shares. I mean, on a move higher, here the volume per bar is 24,000 shares. Okay, here it's only 7,000. Here it's 11,000. Okay, maybe I'm exaggerating. 3,000 shares, it's too much for this stock, but 1,000, 2,000, it can easily go by with the limit order. Okay, so that's an example, and I don't know why I'm taking so much time, because we're running out of time, because we are again under that 15-minute YouTube constraint. That's ludicrous, but that's what we have to deal with. And maybe actually it's a good thing, because you can listen to this video as a podcast if you feel comfortable with, and you know what, maybe it's not that smart, because watching the chart is an issue here. Okay, so that's how you deal with SRRK. Now again, the idea here is not to force trades. Okay, the idea here is to take 2 trades in the afternoon, and be lucky only with 1. So you lose 1% on one trade, and you gain anywhere between 5 and 10% on the other. That's a suitable risk reward, where you get paid 5 times as much as you risk, and if you're lucky, maybe 10 times as much as you risk. Now, how can we get 10 to 1? Those are the stocks that we are going after. We're not going to after stocks that are not moving. We are going to the best of the best in terms of volume, over 5 million shares, intraday range over 5%, stocks that are up already 5 to 10%, and a stock that's up 10% will likely add another 5%, versus a stock that's 0, and its chances out of the blue to reach 5% are, I don't want to say 0, but they are 0. Okay guys, thanks again for this video. I will do 2 more on this subject, because each video goes along too much time, takes too much time, but it's important not to miss any explanatory part of the video. So please like, share. More important for us is to share this video with your friends, especially those who day trade. Thank you. See you in our next video.